All right. Hello and welcome to Collecting What's Owed, Practical Steps to Keeping the Cash Flowing. The 2020s have been anything but easy for business owners in Canada. The pandemic was bad enough. Now businesses are facing the highest interest rates we've seen in decades, high inflation, labor shortages, and supply chain challenges, and the prospect of a recession. Today's webinar is all about helping you plan for and manage the latest storm. Today's discussion can be broken down into three parts. We're going to start with the economy, and we are thrilled to have with us an economist with Xero specializing in small business. Part two, we'll look at what the economic indicators mean for your business and your cash flow, and the steps you can take to keep cash flowing. As every business owner facing biweekly payroll, monthly rent, quarterly tax payments knows, revenue is one thing, but cash flow is critical to keeping on the lights on. Promises of payment don't help you pay the bills. In part three, we're going to look at accounts receivable and the steps you can take to make sure you are getting paid promptly. Now, we're very pleased today to have with us Louise Southall and Faye from the small business accounting software company Xero. Louise is Xero's economist and is based in Australia, where it's currently 8 a.m. in the morning. Good morning, Louise. And good afternoon to Faye. Faye is the Xero country manager for Canada, and she joins us from Toronto. Welcome. It's great to have both of you here on International Women's Day. Faye, let's start with you. Tell us a bit about Xero and your role as country manager.
Yeah, thank you so much for the warm welcome. Happy International Women's Day, everyone. I'm really looking forward to our discussion today. So for those of you that don't know or haven't heard of Xero, Xero is a beautiful, easy to use cloud platform for small businesses and their advisors. It was born as a cloud-based accounting software over 16 years ago in Wellington, New Zealand. And since then, Xero has evolved to provide a full spectrum of connected tools and services that can help small businesses succeed. Today, we have over 3.5 million subscribers around the world, and we offer an ecosystem of 1,000 third-party connected apps plugging seamlessly into the Xero platform. Now, our purpose at Xero is to make life better for those people in small business. And so this topic is really near and dear to our heart because we believe that by making life better for small businesses, their advisors, we're ultimately going to improve the communities in which we operate and rewire that world of small business, making it more seamless, simpler, and smarter. So as country manager for Xero based here in Toronto, my priority is to work alongside our accountant and bookkeeping partners to stretch the legs of our solution and to nurture cloud accounting adoption amongst small businesses in Canada, which is still quite low, in fact, lagging a lot of our OECD colleagues.
Thank you, Faye. Now, Xero is a global company, as you mentioned. Louise, you're the Xero economist specializing in small business. Tell us a bit about what your role entails.
Thanks so much, Anne. And it's awesome to be here today to get to speak to you all. I actually think I have the best job in the world, to be honest. Normally economists, they have to look at the whole economy and they just get to look at one single country. But in my role at Xero, I get to focus in on small business and think about how the economy is impacting small businesses, which is certainly the part of the economy that I'm most interested in. Also, because we are a global company, I get to look at those small businesses from a global perspective and think about what's happening and what are the macro factors across the whole economy. And in particular, I work on a program called Xero Small Business Insights, which aims to provide really high quality small business data, which is very rare. It's very hard to get small business specific data. And we do that so that everybody, advisors, governments, small businesses themselves, can make better decisions that are going to impact small businesses.
So today we had talked about that you're going to share with us some of the data insights from your insights, your reports, and the various data you've collected. What does this research cover, and how do you conduct the research to get this information?
Well, it's a really unusual program. In most business data, small business data is collected via a survey, but our data is not a survey. And that's probably one of my key messages today. So we use the anonymized and aggregated data from our platform to get a really great perspective on what's happening in small businesses around the world. And the sample size for this program is huge. It's over 400,000 small businesses and there's tens of thousands of them are in North America. And we look at a range of countries, so Canada and the United States, but also Australia and New Zealand and the United Kingdom. And having that global sort of nature and feature of the program means that we can understand what's happening in each individual country, but we can also then understand and do some comparisons between countries and get that really global perspective. And let's face it, a lot of the external factors that impact small businesses are actually global macro trends. So I think that makes the program really powerful. We have a lot of elements to the program. So we do regular data releases, literally spreadsheets of data that we make available to people. We also create a lot of business written content. So I do a blog every month. And then we even do really deep dive into specific issues. So, cash flow, for example, or digitalization. And it's all free. So we will put a link in the chat of this session so that people can access it. And in Canada, every 3 months, we release monthly data on small business sales and also on 2 payment measures, because as you talked about in your introduction, getting paid is very, very important for small businesses. So we look at late payments, so the average time between when a payment was due and when it was actually made, and also a time to be paid measure. So how long it takes small businesses to get paid from when they issue the invoice to when it ultimately gets paid.
And if I could quickly jump in and build, one of the really cool things about XSBI, beyond the fact that it's open source, free, and available to everyone, is this Canadian specific data. Our goal is ultimately to allow people to have more insights, right, into those larger trends that may impact either yourself as a small business owner or your clients if you're an accountant or bookkeeper. And the power of that data combined with the latest technology to ultimately increase efficiency and streamline business. So that's why we get really excited about XSBI.
Okay, so the research you have covers basically 3 metrics. You've got the sales, the time it takes to be paid, and dealing with late payments. Why do you think those trends are so important for small business owners to monitor?
Yeah, we think those 3 hero metrics are pretty good indicators of the health of the business, right? So if you're tracking sales and payment data, that's going to give you a good sense of how small businesses are performing overall. The sales allow us to understand the underlying activity in a business. Is it growing? Is it declining versus last year, last quarter, relative benchmarks? The payment times we see as almost a proxy or a quasi cash flow measure, right? We can understand the financial health and situation of a small business. Are they getting paid in a timely manner? Do they have a whole bunch of unauthorized loans floating out there in the market? Are they able to make their own payments, such as wages and rents? So for us, these are pretty good indicators of that core health of a small business.
So right now, with the data you're collecting, what is that data telling you about each of those metrics in Canada right now?
So we have data up until September 2022 for Canada, and this is where I really do become the economist, because normally they're the person who bring the doom and gloom to these types of sessions. So in terms of sales, in September, we had year-over-year sales growth of only 3.4%, which is very slow. In fact, it's a 19-month low in terms of growth. So we've seen this trend of slowing sales in Canadian small businesses throughout 2022. And that's really reflecting the fact that the customers of small businesses are facing higher cost of living pressures. So wages are rising, slower than inflation is. So once a customer's paid for their housing costs, their transport costs, their groceries, their energy bill, there's not a lot left over to spend in small businesses. And we're really seeing that in our data in terms of the sales metric. In terms of the invoice and the payment time measures, both of them, there is a little bit of better news here. So both of the indicators had a bit of an improvement in the 3 months to September compared to the 3 months to June. But the improvement was, very slight. The average late payment time for small businesses was 8.3 days in the 3 months to September. That was just a little bit faster than 8.4 days in the 3 months to June. So a very small improvement. But unfortunately, businesses are being paid a lot later than they were in 2021. So the average in 2021 was 6.6 days. So there's definitely been a shift in that late payment measure when we compare 2021 to 2022. And it's really a similar pattern in time to be paid. So a little bit of an improvement in the September quarter, so 29.8 days versus 30.6 days in the 3 months to June. But despite that improvement, still worse than the 28-day average that we saw in 2021. So overall, in September, small businesses have been grappling with slowing sales growth and having to wait longer to be paid, or being paid late, increasingly late than they were, say, in 2021. So tough conditions for Canadian small businesses.
Okay, so we've been hearing a lot, well, for a long time, the word recession. We keep hearing it, we've been hearing it for over a year now, that we're heading to recession, that it's coming, but the timeline for the recession keeps getting pushed back, or it doesn't come, it's down the road, inflation's coming, it's going to hit. So what is the data telling you about the state of the small business economy in Canada, and where and when and if we're going to see the recession? Anything on that?
Yeah, I think if we take a step back and look at the broader macroeconomic economy and what are the big trends that are impacting small business, I think there are really three big trends. So the first is absolutely that growth question. And yes, is a recession likely to happen? And, as I mentioned with our sales metric, our sales measure is actually a nominal sales measure. So if we lay prices on top of that and take into account price changes, already in September, we're seeing small businesses selling fewer goods in September 2022 than they did in September 2021. Now, in terms of whether or not is Canada going to have a recession, it may not. But even if it doesn't achieve, even if the technical recession kind of definition is avoided, growth isn't going to be very strong in 2023. International organisations like the OECD or Canadian institutions like the Bank of Canada, they're all expecting Canada to have very low growth, starting with a 1% GDP growth for 2023. And small businesses really need to be prepared for that. The second trend is inflation. We've been talking a lot about inflation over the last 12 months. And unfortunately, while it looks like inflation has probably peaked, we're still going to be in a situation where inflation is higher than it normally is. It isn't going to be back inside that target zone for the Bank of Canada for some time yet. And so small businesses are still going to have to deal with the fact that prices are rising faster than they normally do. And inflation is so damaging for small businesses for two reasons. It's really damaging because the actual inflation itself makes it very difficult for small businesses to manage cash flow. So if your prices are rising so quickly, it makes it very difficult for you to get your own pricing policy correct, to make sure that you're maintaining profit margins and you don't get under cash flow stress. Also, the other bad thing about inflation is the standard policy response is also really bad for small businesses. Central banks raise interest rates. That's what economic theory says is the best way to tackle inflation. And so that makes it, if you're a small business, if you've got some debt, that makes it really difficult to pay those loans back. But it also, even if you don't have debt, it's still bad for small businesses because your customers might have debt. They might have, they've got rental payments that might be going up. They've got mortgage repayments to make. And so the purpose of higher interest rates is to slow growth. And so even if you as a small business don't have debt, you're still impacted by rising interest rates because your customers are impacted by it and growth slows. I think the one piece of good news for small businesses today is that the Bank of Canada decided not to raise interest rates again this morning at at their meeting today. Sorry, the time difference is doing my head in. So the that they're the first major bank to press pause on interest rate rises, and so that is a rare bit of good news for Canadian small businesses today. The third macro trend is labour shortages. This has been a theme in all of the countries where Xero operates. It's very hard for everyone to find staff. Vacancy rates are very high. Everybody's trying to rehire people at the moment. But it's so that makes it very difficult to find people. Now, if growth slows, maybe that demand will come off a bit, but most forecasts are that the unemployment rate will only go up a little bit. So small businesses shouldn't be expecting, later this year to have a huge pool of workers to be choosing from. That labour shortage pressure is still going to be around for a few more, for the period ahead. So it's slowing growth, it's still high inflation, and it's ongoing labour shortages. And they're really the three big macro trends that are impacting small businesses right now.
So in the data that you're looking at and the research that you have, are all the sectors, performing the same, or is there any sectors that are performing different in the economy, or some are stronger and more impacted on what's happening right now? Is there anybody that's feeling isolated, not impacted, others that are feeling it more?
Yeah, I can take that one. I think we don't track specific industries within Xero Small Business Insights, but I do know from talking to a lot of the small businesses that we serve, there is variation, right? Particularly in recent years. The pandemic's business restrictions, whether it be border closures, really hit hospitality companies as an example, but we've seen these businesses start to rebound in more recent months. So to give you a specific example, one of our small business clients, Rosemary Woods of F&B Hospitality Group in Windsor, Ontario, along with her business partner and chef, John Alvarez, they own and operate Tallulah Cafe, Funky Chow Kitchen, and Grand Cantina. Right during COVID, they had to navigate restrictions as so many other restaurants and hospitality groups had, but they came out the other side, which we know wasn't always the case. When they speak about their business of operations, Rosemary has shared with us the importance of having one source of truth, right? Being able to see their cash flow projections as a way to make better decisions. And so the advice I would have for listeners is taking a step back, even from specific industries, is to stay really close to cash flow. Cash is still king, particularly in the macro environment that Louise was sharing.
So along with the cash flow, that's having the current up-to-date reporting to make sure that you're making the decisions based on cash flow and real-time information is also
100%.
very important. Okay.
100%. Yeah.
You also conducted the research in other major economies around the world. We talked about US, UK, Australia. Any similarities in the small business performance across those regions? Are there any red flags in those economies that you think Canadian business owners should be prepared for, or is each region kind of coming in it's a little bit different?
There are a lot of similarities across the regions, and having that global perspective, I think, is really useful for people. So it's probably not surprising. I mean, the US is probably the obvious economy. Canada and the United States have very close trade links. And the XSBI data that we have is showing quite similar trends between Canada and the United States. But probably perhaps a less obvious country that people might want to have a look at is Australia. So Australia has a lot of similarities to Canada, similar population size and distribution across the country, similar political systems, also quite similar economic structures, big energy exporters, and both have very important small business sectors. And we do have more recent data on Australia than we do on Canada. And so we've got Australian data up until January 2023. And what we're seeing in the Australian data is that up until November, Australian small businesses were doing okay. Sales were slowing, just like they were in Canada, but they weren't slowing quite as much. And the payment time picture was a little bit better in Australia. But when we look at the data between November and more recently in January, there's been quite a sharp deterioration in the situation in Australia. So we saw, in particular, we track jobs in Australia, for example, we saw a big slowdown. We saw wages come off. And then on the sales numbers, the sales numbers have come off even more. So the Australian data, I think, might be a good early indicator for people, because as I said, in our program, we just have the Australian data a little bit sooner than we do in Canada at the moment. And it'll be really interesting to have a look at the Canadian data when we get the next snapshot to see, what's happened in those last 3 months of 2022.
So we've been talking about the Canadian small business economy as a whole. Let's switch gears for a minute and talk about a bit more about the details of how this impacts, that individual business owner, the small business owner, and what it means for them. What data really should a business owner be tracking on a monthly basis? Kind of what are the red flags? What should they be watching for? What advice would you give them from what you're seeing?
Yeah, I mean, I think one of the things I mentioned off the top in the topic of this webinar is all around cash, right? It's one of the key areas that we've been talking a lot about over the past 12 months. When costs are rising as fast as they have been, it's really important that small business owners understand like money in and out of their business. And so something we're really passionate about at Xero, and our app ecosystem reflects that, is you can use technology to help you with that, right? It doesn't have to be painful and tedious to figure out what your cash flow is going to be a month from now, 3 months from now, 6 months from now. We also have some great partners in the ecosystem, such as Click to Pay and Direct Pay. These are apps that are making e-transfers more accessible for small businesses and facilitating faster payment times at lower interchange fees. Another one I personally love is Pluto. They're a Toronto-based fintech that automates your AP and AR for small businesses, really using technology, again, to make that onerous process a snap and taking that out of your mind so that you can focus on running your business, right? So native within Xero, we also have cash flow prediction tools such as Xero Analytics Plus, right? So using that tool, you can project your bank balance, you can see the impact of invoices and bills, and know which invoices are the most urgent to be addressed. The sum of this is there's so many great tools out there to help you manage cash flow. It's really just about exploring them and figuring out which one is the right one for your business.
Okay, so we've now talked about, we all recognize how important cash flow is to the business and meeting our day-to-day needs and operating the small business in general. And even profitable businesses can run into serious problems if they don't have the cash flow. And sometimes it's not that they're struggling, sometimes it's they're growing. They have growth, and really what happens with growth is they're required to put money in before the money's going to come back. So they're injecting that extra cash on expenses, payroll, and other costs with doing it. So what are some of the strategies that business owners can employ to proactively maintain their cash flow, being a slowdown, recession, when everybody is dealing with, inflation, the higher cost, the higher interest rate, because it's not just you in isolation, it's everybody. So it's kind of, you're feeling it at all ends. You're feeling for the higher prices. You're feeling it, you're feeling it for the slowdown in payment terms. So really, what I'd like to talk about now is, among the three of us, if we could, what can a business owner do to really help get rid of some of that stress and relieve it? So Faye, you're on now.
Yeah,
any suggestions?
I can start. I can start first. One of my favorite phrases is control the controllables, right? So when we think about that, and to your point, there's so many things swirling around. How do you control the controllables? Think about fixed costs, right? Office space. Can you renegotiate contracts? This is an area that I think folks like GGFL and your accountant and bookkeeper can really help. How are you benchmarking relative to other small businesses in the space? And is there room for you to bring down certain things as a percentage of your costs? Another idea would be, can you conduct regular stress tests, right? Making sure you have the money to pay bills, loans, payroll, cover your tax obligations. So reviewing those fixed costs and seeing where you might have wiggle room or room for negotiation, and thinking about scenario planning and stress testing. Again, this is where an accountant really comes in handy, but helping you think through the flex that you have in your system today.
So a lot of that with what you're doing, it's really looking at and understanding where you are as a business. So really a lot of what people have ran across in the past is, okay, there's some out there that rely on the historical financial statements. They don't necessarily I think what the past year has taught us, or years, is that how important it is to have that real-time information and really get the reports that you need to manage your business, because cash flow requirements or cash flow needs are often something that can't wait. They have to be in real time, and you need those resources at your fingertips. And so what you're saying is, it's looking and analyzing, okay, we're, like we're spending at a certain rate, we're bringing money in a certain rate, like payroll's coming, what are we going to do? I think one of the things that ties into that is, like when things are getting tight, you want to have maybe that that cushion, that line of credit you can draw upon if you need it, like that just in case or emergency fund. I think that's one other thing that that the small business might want to integrate and have that in place. Faye, sorry, Louise, do you have any suggestions or anything with regards to what you're seeing on the economist side, or any suggestions in here?
Yeah, I think this is the time when things are tough. This is the time for small businesses to really play to their competitive advantage. And one of the competitive advantages of small businesses is relationships. And those relationships are two-way. So relationships with your suppliers. These are often personal relationships, unlike big businesses where you don't have that personal connection. So talking to your suppliers, making sure that you understand what their situation is, they understand what your situation is, and trying to work together to get through this tricky period, because it's called the economic cycle for a reason. It will improve. It's just about getting through this period ahead. So working with suppliers, but then all the other advantage that small businesses have is they really know their customers. So in many cases, they live in the same communities where their business is. Their customers are their friends and people they socialize with and engage with. So make sure that you really understand what your customers are going through, and have a think about perhaps loyalty kind of schemes, or monitoring your inventories, like what is selling and what isn't selling, and how can you adjust that so that you can make sure that you nurse your business together with your bookkeeper or accountant through this period. So, and also so that you're ready and prepared to go, for when the cycle does turn, as it will do. I just don't know when that's going to be, and I don't think anybody really does, but it will improve. And it's just a case of getting through this period.
Would you also say you're seeing where some companies, like maybe they have several divisions or different products within what they do and how they're doing things? And would you say they're focusing more time and energy on the products and services that are, doing well, giving them a profit, and really evaluating those that aren't contributing to the bottom line? Like, are you seeing instances of that happening within the research you're seeing and the various trends you're seeing among the companies?
Yeah, I think having that capacity to dial up and dial down what's working and what isn't working, and just being really responsive. So, as Faye talked about, making sure you're on top of your numbers, but sitting behind that numbers is what goods and services are actually doing well. Sometimes, for example, in recessions, small treats go well. So sometimes, there's economic research that suggests, like chocolate, for example, sells really well during recessions, weirdly enough, because we have to give up a lot of things, but maybe we can afford a couple of dollars to buy a chocolate bar. And so there will be opportunities for small businesses on those smaller things that do hold up despite it being tough times. And it's really about taking advantage of the fact that you're a small business and you really know your business and you really know your customers, and tapping into that to get you through this period ahead.
I might build on that really quick, if that's okay, Anne.
Go right ahead.
Okay, cool. Because I think if you think about the last few years, right, when COVID and the pandemic first hit, it was all about innovation, right? There were so many industries that were disrupted in how they went to market and how they served their customers, what was needing to go brick and mortar to online, or, adapt, right? And so it was about spinning up new business lines. It was about trying new things. And what I'm seeing in the trends, and at least anecdotally from the small businesses that we work with, is it's exactly what you said, Anne, a refocus on core, right? Now the most common theme is efficiency. Now the most common theme is profitability. And when you think about that, for a lot of small business owners, it's going back to what really works and doubling down on that, cutting the costs and some of the things that aren't delivering or aren't showing positive ROI. So it's been a really interesting arc over the last few years as you think about where people's heads were at and small business owners were thinking 2-3 years ago. And now, given the current macroeconomic context around, again, that focus on core and getting back to doing what you do really well.
And I think from what I've heard from clients and that too, there's also a revisit of the business model and what to do, because I know you hear it, shortages of this, shortage of that. We can't get in the country. They showed pictures on the news, of the shipping yards down in California, all these, transport trailers and container trucks yet to be offloaded. I think we're also seeing like the just in time, it was where people were, they were trying to minimize their costs by minimizing the inventory. I think we've now seen a shift that where people are going back to the local producers, where they have more control, and where cost has been a driver in the past. Now they're outweighing where's the cost to a product versus the guarantee I can get a product. And so a little bit of that is going on. Are you guys seeing a sense of that too, among what you're seeing in the analytics and where it is?
Yeah, I mean, we do track industry data in the in Australia, New Zealand, and the United Kingdom, and we saw, one sector that probably went under the radar a bit, but did quite well during those COVID disruption years was manufacturing, because there was a lot of switching back to local manufacturing, because it had exactly that point you make, that high level of reliability. Than perhaps in the past, the focus had been on the cheapest option. So yeah, we're definitely seeing that in some of the countries.
Okay, so what we're really hearing in a lot of it is a case of what has happened through what we've seen and where we are right now is that companies have really reimagined themselves. They've had to, innovate, adapt to new changes, look at the model and how they operate, revisit where they're getting their product, make sure they're getting the right information so they can make the business decisions, using whatever technology they can, simplifying processes. And I think with Faye, what Faye referred to as well is also looking at, she talked about the fixed costs, but even looking at, well, what don't I need to spend money on? I don't need that new truck, or delaying stuff, right? Delaying the payment of purchasing, and really making any decisions based on cash flow and what's available, because you want to make sure you can make that next payroll, or the rent payment, or the bank loan payments and the interest that goes with it. So and we have the stress test for that. Now we've covered a lot of material. We've talked about a whole lot of things that businesses can do. If you had to give a key takeaway from this in the material, what final thoughts would you give to a business owner on what they should focus on, what trends you're saying? If you had to give them marching orders or something to bear in mind in the back of their head as they're moving forward through this challenging time, as the recession keeps pushing down, if cash is getting tighter, what should they focus on, or what should they do as their takeaway to keep in mind as they're moving forward right now?
First, I'm going to cheat and do two, if that's okay. And
sure.
The first one, and I hope you took this away from some of the points I made, is the really good technology tools to help you now. So we talk about managing your cash flow, and we talk about projections, we talk about automating processes that are going to get you paid faster or for lower fees. There's so many great tools out there. So I encourage folks on the line to explore that. And then the second one is at Xero, we very much encourage not a DIY or do it yourself, but a DIT or a do it together mentality. And so folks like GGFL, engaging your accountant, your bookkeeper, your advisor to understand, how am I stacking up against other small businesses in my space? You don't have to fly blind. The data that Louise has shared is a great example of that. Use that, leverage it to understand how you're doing relative to others and where you might seek opportunity to improve. So I cheated, but I'm going to give two, if that's okay.
Oh, that's fine. It's all the takeaway we can get for everybody is everyone's a winner. Louise, any thoughts?
Yeah, I'd endorse those, both of those from Faye, and I guess also add, encourage people. We have put the link to our program in the chat, so please go explore the data yourself. Have a look at what we've got. Have a look at some of the reports we've done. And spread the word about Xero Small Business Insights as being a source of great information about small businesses.
Well, Faye, Louise, unless you have further thoughts, we're always welcome to open thoughts. But at this point, otherwise, I will say thank you for your participating. Thank you for your comments. They were very insightful, and I'm sure well received by all of those on this call and on the webinar. And we will allow Louise to get on with her day since she's just starting it. And Faye, thank you for joining you at the end of a busy day from Toronto.
Yes. Yeah. Thank you so much.
Thanks so much. Great.
Bye.
Thank you.
And of course, we have one more important piece to the puzzle, and that's the piece of keeping the cash flowing, and that's getting paid for your work. And now we're going to talk more about that. At this point, I'd like to welcome Pierre from Unik Credit Management to the conversation. So Eric, to start off with, can you tell us a bit about what you do at Unic and what your work involves?
Yeah, so we're a credit management company, or more commonly known as a collection agency. I'm one of the owners. I own the company with two of my brothers, and we've been operating since my dad started the company back in 1975. So, and basically, we operate in Ontario and Quebec, and I'd say 95% of our clients are small, medium-sized businesses. And what we do is we collect their delinquent accounts. We collect their delinquent accounts, report the unpaid accounts to the credit bureaus, and we also take it up to legal action when we need to enforce on being paid for our clients' delinquent accounts. Enforcement with getting a judgment, and enforcing that judgment through various ways, most importantly garnishments for our clients.
Okay, so you've heard what Louise and Faye had to say about what their research is showing. What are you seeing in Ottawa and the Eastern Ontario economy? What are you experiencing?
Yeah, well, mostly for Ontario and Quebec, I'd say the last 6 months, we definitely have seen an increase in defaults, an increase in bankruptcies and consumer proposals. Going back to September, I'd say at least a 20-25% increase in defaults. That, again, that could be based on just your overall economy. It could also be based on the fact that, post-pandemic, the end of the summer 2022, people going back to work and actually handling their receivables. But definitely in the last 6 months, there has been an increase in consumers and businesses defaulting on their accounts.
Okay, so we know businesses want to be paid and making things happen. What would you say a business should be doing before you're brought in? Like, what insights or suggestions would you have them as first steps if they see, okay, I'm not sure about this AR, or what do I do?
Well, not specifically just for one AR, all their invoices. If you want to avoid having to hire a collection agency and lose a certain percentage and money on your account, is to have basically a process where all your invoices have an automation where you're in constant communication promptly and regularly with your clients. You're sending an invoice, and 30 days automatically, once that invoice is not paid, you're sending a first letter with a statement. 30 days after that, so now you're at 60 days, you're sending a second letter with an update statement with interest. And after that 60 days, if you're up to 90 days, that final letter, you're basically suggesting that if they don't make their payment, that there will be proceeding with sending their account to collection agency. And a few suggestions to avoid getting to that process is interest, is making sure you're putting interest on your invoices. A common mistake is people after 30 or 60 days, they're frustrated with their clients, or they're just adding invoice on their, they're adding interest on their statements. You have to add the interest on your original invoices. It can't be on your statement following up later if you actually want to collect that interest. It has to be on your original invoices. And another common mistake is people write on their invoices 2% per month interest on overdue accounts. If you don't have the per annum on your interest on your invoices, you won't be able to fully collect that if it gets to the stage where you're in legal action and enforcing that. So two things: make sure it's on your original invoices or an agreement if you have a contract, and make sure that you have that on a per annum. So once you're sending your regular statement after that with the interest, well, the customer is receiving that statement, and that amount keeps getting up. So at 30, 60 days, maybe they will be paying a little bit more. Again, the most important thing is constant contacts with your clients and just sending that monthly statement.
Okay. With the other things that you can do or whatever, you talk about charging interest. Do you have any suggestions, like if you're getting a new client and you're taking one on and you haven't really worked with them before, what would you suggest someone should be doing in that instance?
So, the when they're sending an invoice, the work has been completed, and you're sending an invoice payable in 30 days, and at the bottom is just written, it's almost like fine print that all the invoices have. So it's a new client. It's not aggressive. You're not insulting that client. It's payable in 30 days, or interest 24% per annum. Something like that would be very reasonable.
Okay. And if it's a newer client, would you suggest, retainers or installment schedule or something that be put in place if you don't have the credit history with them? Or what would you do to ensure their credibility? We'll call it the credit rating, of someone you really haven't worked with before. Anything you would suggest?
Absolutely. One thing that some of our clients have when they take on new clients and they're applying that credit is getting that customer to sign a credit application. And most importantly, especially if you're dealing in the construction industry, is having a personal guarantor. That makes a big difference, because companies, small businesses, especially in the construction industry, can close and reopen them again. But if you have a personal guarantor where the director, it's this new company, they're starting up, they'll sign that personal guarantor. It's very important that they will sign that personal guarantor. That way, if you have a problem with that company, the company closes it a year or two, which is very common, you still have that personal guarantee against a person. Very important.
Okay. And I know one of the other things that I've been hearing from some clients is what they're doing now is when you start working with someone, getting a retainer. So the first time you do a bill, even getting some paid up front, like 50%, like if you know what the value of the work's going to be, taking that retainer and setting it up so that before you have that relationship with somebody, like you're kind of getting paid up front and you're sure you don't, do all the work, or, making sure you don't agree before you get paid, but having that set up to, take a little of that anxiety as you go forward. Now, we've talked about the things someone should do before they bring you in. When should they bring you in, or what do you suggest when it comes to when they should reach out to you? At what point does it make the most sense?
Yeah, typically an account in our industry is considered delinquent after 90 or 120 days. So after 120 days, if you have your due diligence, you've sent all the letters, you send that invoice and you've sent 3 monthly reminders. At that point, the account's considered delinquent. So it's very reasonable to send your account to collections once that account is overdue 90 or 120 days. That would be the minimum. One thing I do strongly suggest is don't wait too long, because after 1 year, that debt technically is worth half its value just on the chances of being able to collect. And one thing, especially with smaller businesses that tend to hold on to their receivables just because they don't want to spend money to help collect it, is they hang on to it too long and they wait 2 years. Well, if you wait 2 years, you legally don't even own that debt anymore. Because you can't take legal action. The statute limitation in Ontario is 2 years. It's 3 years in Quebec, 2 years in Ontario. So,
is that 2 years since you started the work, or 2 years since they last acknowledged the debt? Can you frame when that 2 years starts?
Absolutely. It's two years from date of default, or 2 years from date of payment. So if the person was making payments, it's 2 years from that last payment. Or if there was never any payments done, it's 2 years from date of default.
So even if they've been acknowledging that they had this debt all along and promising doing payment, if no payment's been made, it still goes back to when the original invoice was issued.
No,
with regards to 2 years.
Default. So if you have a written promise payment with the exact date of that promise and the amount, you can use that date.
Okay. So it does extend out. It doesn't go back to the original, depending on what you have in writing. You can actually extend the 2 year period. Absolutely. Okay. And what does a business owner really, to do your job effectively, what does a business owner need to do or provide you with to do your job?
Most importantly is contact information, address, phone number, email address of the person you're dealing with, invoices, and all the follow-ups you've done with that client.
Okay. And the process, once you've been engaged, really, how does it work, and what sort of strategies that you do that are different that maybe the owner might have already undertaken? Like, what is it that you do once you get involved?
So once we get an account, the first thing we'll do is we'll open it, and then there are a collection notice that will be sent to our client's debtor. That notice will basically advise them that their account's in collections with us, for our client being the creditor, that they have a certain time, usually 7 days, to pay the account. Otherwise, two things. One, the debt will be reported to the credit bureau, and two, we may proceed with legal action. So as a collection agency, we're a member of Equifax and TransUnion. So the one thing that people do try to avoid is to have a bad credit. And that's where we have, that's why people use our services. As a member of the credit bureau, we can report that unpaid debt to the credit bureau. And what we do is we do try to get them motivate and that chance to avoid having a bad credit, so they pay their debt or even make a payment arrangement. And that's one thing that our clients can do as well, is before sending out to collection, is try to get a payment plan going. But if all else fails, then they'll have to send it to collections, and that's what we'll do. Mostly, credit bureau reporting. And if it's a large amount, usually over 2,000, aside from reporting to the credit bureau, we'll take legal action for our clients. Basically, file a claim in court, get that default judgment usually, and enforce that judgment with garnishments.
Okay. How long does the process normally take?
Once a client sends an account to collections, the account's open within a day or two, and the process starts right away.
And how long from when the process is started would the business owner see any money, if they were going to see any?
So
Like, would they get a return?
Any payment that is done within that same month is deposited into a trust account and then sent to our client the following month.
So they could see it as quickly as they come with you, and within 60 days they might have part of their money. Do you normally get the full amount, or well, you keep your fee from there, but you're generally able to get the full amount that was basically sent to you in most cases?
When it comes to commercial debtors, we'll usually get the full amount or a reasonable payment plan that's paid within 6 months. When it comes to individual debtors, it's usually more a payment plan, and we've seen payment plans go from 1 year to 2 years. And that's having a payment plan. We don't have an option. We could take it to court, get a judgment, and the judge will say, okay, they can pay for 2 years. So at the most, it's with individual or consumers, debtors, you're looking at 2 years at the most. With businesses, it's payment full, or a payment plan that's reasonable within 6 months.
Okay. And are there times where it's just simply better to give up? And like, are there ones where you get and you're like, oh, this isn't worth chasing, better to write it off and not even go after? Do you ever run across those, or what advice would you have on that?
I mean, we have accounts, if it's under $100, you write it off. But we'll have accounts that are a couple $100. That we'll have accounts that are $100,000. So it varies completely. But sometimes, a client will call me and they'll give me the name of the company or the individual, and I'll tell them right away, don't bother, it's not worth it. The company we know has closed. So we'll just, for our client, we might file a consumer proposal if we receive a proof of claim from the trustee. But yeah, usually if it's under $100, write it off. If it's over $100, you might as well send it to collections.
So have you seen a change, with COVID, with what we're seeing with businesses? Like, for a while, businesses were popped up because they had the incentives coming through from the government. You had the CERB, you had the CEWS, you had all those other programs. They're gone. And, it was predicted that we were going to see more, defaults on payments and in business and personal. So you said the last 6 months, you've seen more of an increase in that. Is that what you're seeing? Do you expect it to continue to increase, or is there anything you're hearing in your sector on what you're seeing going forward?
Absolutely. So during COVID, once the government benefits kicked in, we were really quiet. People were getting paid. People, as individuals, so they were paying off their bills. Our clients, businesses were getting paid. So that was not an issue. Interest rates were low, so it was easier to borrow money. So we had old debts that people had not paid, reported to the credit bureau. So a lot of people with low interest rates were trying to get financing. When people go to financing, you'll see a bank manager will pull up your credit, So you have a couple accounts in collections, pay those off, and we'll be able to get finance for you. So during COVID, people, had money, low interest rates, so people were getting financed a lot, so paying off their debts. Now it's up, a bit of opposite interest. Interest rates are a little higher. People are borrowing less. People have less money, so they're paying businesses a little slower. So definitely huge difference between now and during COVID when people, were receiving benefits.
Okay. So in speaking to the small business owners and others in the audience, like you're through the process, you have this collection. You've talked about some steps to put into place and to formalize on how to improve the AR. Anything else you can think of, that you'd want to leave the audience with as some thoughts on really, here's some stuff you should consider, to improve the cash flow health of your business, get paid by your customers, see your, money coming back on your bills sooner. Any other thoughts or things, or even an example, let's say from someone you've worked with, it's something that really worked, that it's one of those, aha moments that's like, okay, well, maybe, try this, or any of the things that come in play.
The most important thing I would say is the constant communication with your clients. After that invoice is sent, don't wait too long. I'll have an automation process where 30 days, 60 days, 90 days, you're constantly sending reminders and updated statements. So communication with your client is the most important step. One thing, if you've done that and you're still not getting paid, try to get a payment arrangement. If there's no response, a lot of people will offer settlements. One thing that's very important is if you're offering a settlement, let's say, it's a $5,000 account and you're offering a settlement for $4,000. Well, make sure you have a date for that settlement. For example, the invoice will be reduced to $4,000 if paid within specific date. And if that payment isn't done by a specific date, the full amount will be due. Because I've had clients where they've offered that without, specifying that the full amount will be due if it's not payment. And now their client is sending us the account. They have to pay our commission on the reduced amount that they can't go back to the original. So constant communication, just be careful with rewarding. If you're going to send a letter to your client, maybe, check with us or check with a lawyer to make sure your wording is correct, because otherwise you could end up losing a lot of money.
So in the example you're given, so a client trying to collect it said, okay, pay me this reduced amount, but because they didn't put a date on it, there's no end thing to it. That's considered legal and binding for settlement of the debt going forward indefinitely. There's no end time frame to it.
That person can use that letter in court and say, this is the amount that they told me to pay, and this is what I'm willing to pay. Absolutely. So make sure you have a date for that settlement. Otherwise, full original invoice will be due.
Yeah. So there's no similar things. For example, if you're offering, you're trying to negotiate or getting the pay stuff early, that you're offering, if you pay within the first month, here's what I'm offering, that won't fall into it because you have a certain end date for it. It's just if you're trying to collect it and you're putting, okay, this is what if you pay me now, I'll maybe, let's say, forgive the interest charges or finance charges, just pay me X and, we're square. But if you don't put that end date on, even if they go through you, the whole total amount you can go after is less.
Yeah, we've seen in the past where the debtors use that amount and our clients has lost money. Yeah. And
anything you're seeing in the court system, like in going through small claims or anything, has anything changed in there given in recent processes, or any tips or tricks that we need to be mindful of for that?
The court process is slow. They're very backlogged. All the homeowners, if you have a income property or property management properties, the landlord and tenant tribunal, they're basically at 6 to 9 months waiting. So the court system is slow, is very slow. So if you can get a payment plan going, you'll save time and money by not avoiding legal action.
So you're saying that the housing thing with tenant landlord is behind. Is the rest of the court still moving pretty much similar, or has been slowdowns in too because of the hybrid model we're seeing? within.
It's been slowed down. It's been slowed down for sure. It has increased. I'd say in the last, again, going back to September, people, going to the office more regularly. So maybe in a year or two, the court process, the small claims court and the landlord and tenant tribunal will be caught up. But right now, you're looking at 6 to 9 months delay before you even see a case.
Okay, so your business has been impacted by the various things going on as well between hybrid and everything else. So it's just another example of where it's a new reality for us, right? With the timeframes that we're getting and what the expected turnaround time is and what we're seeing. Another example within the credit industry as well. So I think when we talked about, I think we covered off what we were looking to cover. I'm looking to see, I don't see any questions in the chat. Any last thoughts you want to leave with the audience on, here's what you really need to do, or?
What I always keep saying is make sure, you're keeping constant contact with clients promptly, regularly, and, you have the old invoice, never wait, constant prompt contact with your clients.
Well, Eric, thank you for joining us today. Thank you for everyone else who joined us today. We hope you found the session informative, and have a great rest of your day. Thank you.